Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We have a couple Dow components this week for the top stock picks, including one industrial and one big bank. The Dow components are doing well, and both these companies have already reported, so let's get right into it. I'm joined at the chairs this week by Neena Mishra. So Neena, you brought the industrial Caterpillar,
Yes.
and the report seemed fantastic.
It was very good. So Caterpillar is the world's largest heavy machinery maker, and that's why it is seen as a bellwether for global economic activity. So this company had to struggle with sluggish demand for many years, but now it is benefiting a lot from global economy picking up and a weak dollar because they derive more than half of their sales from international markets. And we know that for the first time since the recession, every major economy in the world is now growing in sync.
Yeah.
And that benefits Caterpillar a lot. It's a Zacks ranked #1 stock with a momentum score of A. And as you mentioned about their results, they were really strong. They beat both on the top and bottom lines and also raised their earnings guidance for the year. Their sales were up 35% year over year with strong growth in North America and China. Now, during the quarter, they took a $2.4 billion charge due to write-down of deferred tax assets and deemed repatriation of overseas earnings. But they say that over the long term, tax reform is going to be really positive for them because it creates a more level playing field with their foreign competitors and also gives them more flexibility to access their overseas cash. Now you can see from estimate revisions and the trend that analysts had been raising the estimates even before the report in anticipation of a very strong report, and they have continued to raise estimates after the report as well.
Yeah, that's a nice jump into 2019 there.
Yeah, very nice.
Because that's
jump.
a whole nother year away.
Yes, yeah, right. And in fact, if you look at their price consensus and EPS price chart, it looks pretty good. Only one miss in the past few years, so they have been beating consistently. And the stock has a nice dividend yield of 1.9% as of now, and they have been returning a lot of cash to shareholders via dividends and share buybacks. And if and when they repatriate their overseas cash, we could see a rise in dividend again.
Now, is there any worries just by looking at this chart? I mean, obviously the shares soared in 2017. It started off pretty hot here in 2018. Are there worries about valuations with Caterpillar now?
Yes. So the stock, as you said, it was up 75% over the past 1 year or so. And that is why, because anticipation has been so high with this company and because it has grown so much. So that is why after the result, the market reaction was kind of lukewarm. It soared initially, then came down, then ended a little bit up. But I think it's a great play on global growth story, and it's a good holding in any portfolio over the long term.
Okay. I've always liked Caterpillar, so I'm glad to see it rebound here. I wish I would have been smart enough to get in at those 2016
That would
lows,
have been perfect. Yeah. Lovely rise from there.
The stock I brought is JP Morgan, and obviously one of the biggest banks. It's kind of seeing a similar story as Caterpillar, strangely, but it too took a big write-down from the tax reform, but going forward, it's expected to see big gains off of that reform and off of the rising rates. As those interest rates rise, these guys, all the banks actually, will see benefits right then to their bottom line. So I really like JP Morgan. I like all the banks, but they have an excellent earnings beat again. They have the global strength, and they also have solid credit. That's a good thing about the banks. I know people are still a little scared to go back into them after what happened about 10 years ago, obviously. I don't blame them. But a lot of that has been fixed, so to speak, and a lot of them have you know, the real pristine balance sheets now. So
That's
JP
correct.
Morgan, one of the big,
One of the big beneficiaries. And interest rates are really rising this year.
Yeah.
They were around, the 10-year note was at around 2.4% at the beginning of the year.
Yeah.
And now it is 2.7.
yeah, already. So
A big jump.
Yeah, so that should help these. You can see I put up the earnings estimates here.
It's a
and
beautiful chart.
Yeah, and then the beats, they keep beating. Going to see the 27% earnings growth this year. And, you know, you can ask the same question here. Look at that chart. It's pretty crazy.
Pretty and very similar to Caterpillar's
Yeah,
chart.
it wasn't up 75% last year, but it did have a nice gain, double-digit gain. But it's just trading at 13 times, so it's considerably cheaper than Caterpillar, but the banks usually do run cheaper.
That's
but
right.
I like it anywhere under 15. I like any of these big banks, and as those earnings rise, it continues to stay affordable, I should say. So I own this one in my value investor portfolio, and we've owned it a little over a year now. So I do
That was
like
a good timing, I must say.
it was, yeah. It was, you know, like I said, I like any of these. So, but JP Morgan is one of the
best.
yeah,
among
one of
big
the
banks.
peak of the big banks.
Sure.
Similar to Caterpillar, you would want it as a long-term hold here.
And one more thing about Caterpillar I wanted to add, that the timing of Trump's $1 trillion infrastructure plan
Yeah, what if that comes?
remains uncertain as of now, but whenever that is announced
Yeah.
or launched, then Caterpillar is going to be a big beneficiary.
Okay, there's a lot to watch with these two companies. If you'd like to know even more stock picks, be sure to go to Zacks.com and tune in every week for the top stock picks, because we'll bring them to you all during earnings season and beyond, all the top stock picks you'd want. So be sure to go to Zacks.com, and we'll see you again next time.